But good, great. Thanks for joining us today. As our introducer said, my name is Heather Bateman. I work at the DFC in our Office of Small Business and Financial Services. So this is essentially the financial institutions group of the Development Finance Corporation of the U.S. government. So we are the DFI of the U.S. government, similar to many other DFIs here. Just a brief kind of background on us, if you're not familiar with DFC. We have 5 main priority areas, financial services being the largest portion of our portfolio, including health and agriculture, energy, infrastructure, and equity investments into funds. We have a $40 billion global portfolio, including $10 billion in Africa, and very much looking to grow that. We work across debt, credit guarantees, political risk insurance, equity, as well as technical assistance. So happy to talk with anyone after this panel if you're interested in learning a bit more. But just to reiterate, this is the panel on strengthening ties and maximizing U.S. institutional investment in Africa. So hopefully that's what you're here for. If not, I hope you also please stay. I guess just to kind of kick things off, I guess I'm coming from the DFC, so thinking about the work that we do every day, really our guiding principle and really just a part of the mandate that we have is thinking about how we can catalyze and really mobilize private capital in all of the work that we do and all of the transactions that we do. It's something that we look at from the very initial points of kind of screening a deal all the way through all of our investment committees, board approvals for all of our transactions. So it's something that's really core to the work that I do, which is why I'm excited to introduce the panel here today and very excited to hear them speak about the work that they do as institutional investors or working as institutional investors and thinking about ways that we can build on those, the opportunities they bring and strengthen ties, certainly among, I think, the 5 of us as we've been learning a bit more about the work that we do as well as all of you. So I'll let each panelist introduce themselves in just a minute, but after that, we'll go through 3 questions, and then I'm hoping that there's at least a little bit of time at the end to share information that you may have, case studies and examples that you have, and just kind of have a bit of Q&A at the end as well, assuming there's time. So I'll let our panelists introduce themselves. I guess we'll just go straight down the line here. So David, please go ahead.
David Grayson, I'm from New York City. I've been in the financial services business for about 35 years. In 1993, I started a company called Auerbach Grayson, which I recently sold. We were in 2 businesses. One was traditional stockbroking, but only to primarily US-based institutions who were investing overseas. And the other was investment banking, and both businesses were mostly focused on emerging and frontier markets, but we operated in over 120 markets around the world. I first visited Africa in 1994. South Africa, the sanctions had just been lifted, and there was a huge rush for foreign investors to invest on the Johannesburg Stock Exchange. And from that, in the days before there were internet emails, and yes, there was a time where that, and we didn't have mobile phones. I just got on an airplane and started flying around the world and building relationships. I sold the company last year, and I formed a new company doing investment banking, again with a focus on emerging and frontier markets.
Great, go ahead, Thea.
Good afternoon, I'm Thea Jameson, and I'm the managing partner of Change Global Investment. Change Global is a specialist investor in the public markets in the emerging and frontier countries. And we invest on behalf of institutional investors, such as pension funds, endowments, foundations.
Oh, yeah.
I've been doing this work for 25 years. It's not only close to me professionally, but also personally, because I grew up in Eastern Europe. And I've worked with David for nearly 25 years as a client of his. And so it's been a tremendous journey. I think a lot more work that needs to be done. But I'm happy that we're here to raise awareness for the tremendous opportunities, particularly in the African public markets.
Great, thank you.
Hello, I'm Carissa Graf Suleiman. I'm general partner of the Continent Venture Partners. We're an early stage venture capital fund investing in tech-driven startups across the continent. I have a 25-plus year background in investing and growing companies across the continent. I was a tech entrepreneur on the continent myself. We scaled a satellite-based communication company providing voice, data, and internet access to 25 countries across the continent based in Nairobi, Kenya. And now we want to take that experience. Our team right now for the Continent Venture Partners, we're a team of entrepreneurs that have scaled businesses outside of tech as well. We want to take that experience combined with our knowledge of how companies can expand and navigate different markets across the continent and invest in the new generation of entrepreneurs to build the innovative solutions that are solving pain points for the African consumer.
Great, thanks. Good afternoon, everybody. It's a pleasure to be here today. My name is Alan Hackner. I work for USAID, United States Agency of International Development, based in the USAID Southern Africa Regional Economic Growth Office. And our mission really is to catalyze inclusive economic growth in Southern Africa through trade investment and working with the private sector. USAID Southern Africa recently launched the USAID Southern Africa Mobilizing Investment Project to address a spectrum of funding gaps in Southern Africa's investment ecosystem. And the project aims to build the capacity of emerging fund managers, stimulate innovation, and encourage otherwise risk-averse investors to engage in new opportunities that will enable financing to reach unserviced or underserviced markets in Southern Africa. We have our implementing partners in the room, at the back of the room there, and look forward to the conversation.
Great. Well, thanks, everyone. That was a good background of everyone's work. And I think as we probably heard, quite a wide spectrum of work that I think we're qualifying as institutional investors. And certainly work, as Alan was saying, that works alongside and helping to catalyze institutional investors as well. So I think to start with the first question that I was considering for this panel, I'd be interested in just hearing from each of you, based on your own experience, what you see as the biggest opportunities for institutional investment. Again, either from the work that you do yourselves, investing directly, or helping to facilitate investment on the African continent. So I don't know if anybody in particular wanted to go first.
Last. Do you want to?
We'll go the other way around.
Yeah, go ahead.
Okay, so through the projects we are working on, we are seeing high impact investment opportunities in private equity, venture capital across sectors. In areas such as clean energy, health, infrastructure, education, affordable housing, agriculture, and other tech-based industries. But I particularly like to use the opportunity today to make a case for the growing and nascent venture capital industry in Southern Africa. So according to a 2024 Venture Capital Association, or Africa Venture Capital Association report, over $4 billion was invested in more than 250 capital deals between 2022 and 2023 in Southern Africa. Venture capital was the most active asset class by deal volume, with 132 deals totaling $1 billion. In 2023, Southern Africa was the only region in Africa to register positive year-on-year growth in venture capital deals at 20%, and also saw the highest venture capital deal value on the continent. So it's an area which we really are seeing incredible growth, and we are really trying to attract and encourage international and institutional investors to look to the sector. Despite Southern Africa's relative strength in the African venture capital landscape, though, VC remains a very poorly understood and underdeveloped asset class, and very little capital is allocated into VC by African institutional investors. For example, the state-owned Public Investment Corporation, which manages the South African Government Employees Pension Fund, which is the largest pension fund in Africa, with over $100 billion of assets under management, just allocates 0.6% to private equity, according to its 2024 report. And globally, allocations are much higher and rising. And I can give you examples of where that is happening. In the US, the pension funds contribute about 65% of the capital raised by VC fund managers, and European pension funds are responsible for close to 20%. According to the UK's government British Business Bank, global VC and growth equity asset class has outperformed stock markets over several decades, delivering an average of 18% net return per annum compared to 11% for the MSCI World Equity Index. Given the infancy of VC in South Africa, there's very little data on the number and profitability of exits. However, anecdotal information on a limited number of known exits points to IRRs of 30 to more than 50% and 4 times money. And so while VC is still a nascent sector in Southern Africa, the number of startups is growing, as well as the number of emerging fund managers. And by investing in these funds, investors not only provide entrepreneurs with the capital they need to scale, but they gain the exposure to a quality set of opportunities within a diverse portfolio of investments with exceptional opportunity to earn exceptional returns. So would like to hand it over.
Sure.
to my colleagues.
Yeah, great.
Yeah.
Oh, go ahead, Chris.
Yeah, well, it's very interesting. I think we dovetail very well together because we are a VC fund. So we address a number of those. So we have a portfolio of 32 tech-driven startups across the continent. 40% of our founders are female co-founders or co-founded. We are a commercial first with impact venture capital fund because we believe that unless something is making money, it's not sustainable. And so we think that we can achieve, well, we know we can achieve impact with commercial returns. But generally, what are the opportunities across Africa? I was on a panel last year with a woman I thought put it beautifully. One, it's a young, urban, and growing population. 2, entrepreneurial. And 3, fun. What does that mean? Let's go back with young, urban, and growing. You know, the median age across Africa, I see a lot of familiar faces in this crowd. I'm sure you've heard all these statistics. But the median age in Africa is 20, compared to 28 in India. China's 38, and Europe is 44. So you have a digitally native population that is growing. 50% of the population will live in cities. That's an opportunity, as well as we'll get into challenges later. But what does that mean? More innovation, more cultivation in ideas as Africa rapidly urbanizes. By 2030, there's going to be, well, 2035, there'll be 1.6 billion working adults on the continent, 30% of the world's youth, and $2.5 trillion consumer market. So the opportunity is there from the growth perspective. Entrepreneurial. Africa has the highest rate of entrepreneurship in the world. 22% of the African population, and I'm talking about formal entrepreneurship, is not compared to, it's compared to everyone having entrepreneurial spirit on the continent, whether they're working their 9-to-5 job and then an Uber driver at night, or buying a car and leasing it out to a cousin to drive as a taxi during the day. There's that entrepreneurial spirit that I think provides great opportunities for institutional investors to invest in the growth of the continent. And finally, what do we mean by fun? You have a young, urban, growing population that's digitally native, the creative industries. Nigeria alone produces more content than Hollywood or China combined. I mean, when I learned that statistic last week when I was in New York at the UNGA, it boggled my mind. So there's opportunity for investments in growing the production quality and the reach of all that content being created in Nigeria. Sports, the NBA, I was on in a discussion with the NBA Deputy Commissioner 2 weeks ago. There's 12 NBA-affiliated professional basketball teams on the continent, and they see Africa as one of their hugest growth markets in the world. Not to mention all the players that are currently playing in the NBA. They're trying to build the league here on the, well, not here on the continent, as well as just taking players and bringing them into NBA franchises. NFL, our football, the American football, is also looking to expand a league and train and develop players on the continent, as well as soccer, your football, is also, there's professional teams being developed. So you have the creative industries, you have the sports, you have this young dynamic population, all providing tremendous opportunities. And I'm going to be an optimist. I'm sure that we'll get into the pessimist side of this investment later. So what are the overall opportunities? You have this young, unbaked, tech-savvy population, heavily cash reliant, still, despite the growth in the fintechs. You have increasing mobile penetration, an improving regulatory environment, all providing a platform for greater financial inclusion and digitization on the continent. So as a VC, that's what excites us. Yeah, and I have more to say about the tech field renaissance, transforming industries, expanding markets, increasing access, and bringing more people into the financial markets and the global economy, which I think are also opportunities for institutional investment. So from a VC perspective, being on the ground, we see a lot of opportunity, and bringing institutional investors via someone on the ground that understands the market dynamics to invest in these growing opportunities across the continent.
Thank you, Carissa. All right.
Okay.
Keep on down the line. Go ahead.
So from a public market perspective, the biggest opportunity is to get exposure, period. Most American institutional investors do not have any exposure. They may have a little bit of emerging market exposure concentrated with 3 or 4 large economies, but really nothing to Africa. And so my day-to-day job is to meet institutional investors, to educate, to raise awareness about the opportunities, to dispel misperceptions, really arbitrage perception and reality. And it is a challenging proposition because, as you all know, the American stock market has done incredibly well. The US dollar has been a global king. And so there's very, very little appetite for anything outside of the American public market. I do feel that things are changing. I do feel that we are beyond an inflection point. Part of that is heightened valuations in the US market. Part of that is political uncertainties in our country, but also some signs that the dollar may have stabilized, perhaps weakening, which would be incredibly bullish for Africa and emerging markets as a whole. In terms of the proposition that we make and the case that we make for Africa, we see the African public markets as really the only area in global emerging markets where we can find growth, we can find quality, and we can find incredible valuations. On the growth side, that's improving. The outlook is certainly better today than it has been in several years because the economies are going through a general, broad, healthy recovery. On the quality side, in Africa, the business environment is quite hostile. So the companies that do earn that market leadership and are sufficiently big enough to be publicly listed tend to have very strong profitability with limited leverage. And that is a very compelling characteristic for quality. And lastly, the proposition of valuations, the African markets on average are trading at 8 times trailing P. This is a real P. This is not an estimated 25, 26 PE with good profitability, high dividend yields. These are numbers that are more or less near historical lows. In terms of the catalyst, just very briefly, at this point, the markets are sufficiently domestically oriented. And what I mean by that is before the pandemic, more than half of investors, and David could probably speak better to that point, but more than half of investors were foreigners. And today, that participation has dropped nearly a quarter. That's participation of daily trading and volume. And so what that tells us is that these markets are becoming more domestically oriented, more idiosyncratic in their risk. They're driven by local events, assets, local news. And this is very, very good because it's healthy. It means less reliance on foreign fleeing capital. And it also means that from a US institutional standpoint, these markets are becoming a better diversifier for investors.
So I'll say two things to start. One is I talk from a perspective as someone who's traveled to over 100 countries around the world and done business in over 100 countries. The fact that there are 1,200 people at this conference today, I think shows that everyone here, you have to be an optimist, right? And you have to think that there's an opportunity in Africa. But I hate the question, and it's not the first time it's been asked, nothing against you, Heather, but about when people say, well, where are the opportunities in Africa? The problem is Africa is not the United States of Africa.
Sure.
Every country in Africa has a unique, if not more unique culture and way of looking at whether it's capital markets or businesses. The same way, Italy is different than Denmark. Maybe that's not a great analogy. But if you're looking for opportunities, whether it's the public market or private market, or you're a strategic investor, you have to look at each individual country and see what the opportunity is there. And to Thea's point, if you're looking in public markets, you want to look for a market where there is a base of local not just institutions, like in Kenya, I think it's 30% of the pension funds have to be in the equity market, but there are retail investors, because whether it's the United States or whether it's almost any other market in the world with a retail base, what happens is the local domestic investors all think they're smarter than the foreigners, so when the foreigners are buying, they're selling, and vice versa. And in Africa, what you have is a mixture of different views on capital markets. So in some countries, they're very developed, like South Africa, or even the tiny market of Botswana or Mauritius, where you have some great banks. And then you have markets in like Cote d'Ivoire, Ivory Coast, where none of the chief executives of the listed companies are owners. So if they don't own stock, they're not motivated to even talk to investors. So you want to look for markets where there is an open climate and open disclosure in terms of doing business. But just moving on, if you said to me, pick one market today where you see the most opportunity, it would have to be Ethiopia by far. And I said the same thing a year ago, and I'm sitting here saying that again today. It's a country of, I don't know if anyone here was in on their panel, but it's a country with 120 million people. It's the largest country in the world in terms of the economy and population without a capital market system. They're opening up the stock exchange. The Sovereign Wealth Fund has, 30 different companies in it, ranging from the airline, Ethiopian Air, which did $7 billion in revenues last year, down to some very tiny companies, but mostly all profitable. And I would imagine at some point they'll list them. And whether the whole country is open now to strategic investors to go in there. They need a lot of help. And in my opinion, it's what you were saying, they're young, energetic, highly educated people who are trying to build something.
Great. So I think if I were to synthesize the remarks here, I mean, I know everyone's coming from different experience, but in terms of opportunity, incredible growth potential. across the African continent, and I think very well taken point. These markets are quite different. Some are, more regionally integrated than others, some countries, but each country, each financial system, each regulator in that market, regulators in those markets might have their own way of doing things, and very much do. So I think maybe then to move on to my second, and I might even, I think for time's sake, merge it with my third question, trying to keep with optimism here. It would be interesting to hear what you do see then of some of the challenges to really acting upon these opportunities, again, coming from each of your unique backgrounds. But then what you see as potential solutions, either things that you have already started to do yourselves or as ideas of ways to partner with others who might be here at this conference or kind of just more generally to come up with solutions to those. So I mean, just to kind of highlight some of the challenges that have already come up, sort of just misunderstood asset classes to invest in, liquidity challenges. Some of these markets are just, comparatively really not that liquid. And again, just sort of understanding the differences in all of these different markets, and yet knowing that they aren't integrated can be a challenge. So I don't know if that catalyzes any thoughts here. Anybody want to start off with that? If not, I might just go right back down the line and start with you, David.
Well, it's a good question. So part of the problem is we're here today focused on Africa, but Africa as a whole, or each country in Africa, is actually in competition with all the other emerging markets of the world. So whether it's and forget about the BRICS countries, but whether it's Vietnam or Cambodia or Argentina, the competition for investors is a global competition. It's not about Africa, unless you're running a pure Africa fund, most of which have disappeared. And this, I think, is the only conference that focuses on the whole continent, which is very good. But if I was sort of running the whole place, I would bring together all of the central bankers and all the ministers of finance and try and get everyone coordinated to be singing the same song to investors. There's too many aberrations among the different countries, and it makes it very difficult for investors. So you not only have to be a company picker, you have to be a country picker also. I could go on and on, but I'll stop.
Yeah, I think the biggest challenge is just lack of knowledge, lack of willingness to explore and learn. And so I feel the best thing that we can all do as a community is raise awareness, educate. I think that there's a particular opportunity to work with the local stock exchanges. I think the JSE has done a fairly good job in marketing their capabilities, marketing the South African Stock Exchange and the broad universe that it has. But we have not seen that from any other exchanges. So I would like to see the exchanges getting on the road, speaking to investors, being a part of the discussion, and educating on the opportunity set, which in turn will address some of the misperceptions that we face on a daily basis trying to raise assets for this opportunity.
Now, actually, just to probe you a little bit more on that, from the clients that you work with, various institutional investors, do you find that they just sort of assume Africa sounds risky, let's not go there, I don't want to necessarily understand, or is it purely just I've never been exposed to this, so I don't even necessarily know where to start? What do you find is more the tendency?
I think it's more the uncertainty, lack of knowledge. You may know that in America, less than half of the people have passports, and the ones that do tend to get them for travel to Mexico or Canada. So there is definitely a void of information and knowledge. The institutional investors that have made the commitment to the African markets, I would dare say, are pleased with the outcome, because they do see the benefits of diversification. That said, they're always very timid about publicly acknowledging this exposure because of career risk. And so as long as we as a community can dispel some of those misperceptions, I think that the proposition is strong enough to see a dramatic shift in assets.
Wow. Great. Carissa?
Yeah, so the reason why I'm optimistic and the opportunities I see are also on the flip side, the challenges that we have to face as investors. You know, as David said, it's Africa's 54 countries, you know, each with their own regulatory environments and idiosyncratic market dynamics that, you know, you have to be an experienced investor and knowledge on the ground to navigate. You know, the growing and developing and deepening economies across Africa, while presenting an excellent opportunity for investment, also are more susceptible to shocks and disruptions. You know, you've seen devaluing currencies, Ghana, Nigeria, Kenya, and across Africa. You know, to put it in perspective, you know, Maryland, the state of Maryland in the United States has the same GDP as South Africa. So, you know, while these economies are growing and you see tremendous opportunities, it is relatively small compared to the other areas around the world that are attracting investment. So we need to make it more attractive. Also, the young population, while exciting from a digital native standpoint, fintech solutions, digital solutions, it also can pose a problem politically, as we saw in Kenya with the passing or the attempted passing of the revenue bill. There's also, or the tax bill, you know, there's also the need to create jobs. So we're investing in our portfolio companies, you know, focusing on job creation. There's also a tremendous credit gap. I think I learned this from Leila's speech earlier about the $5 trillion, on her panel, the $5 trillion credit gap for SMEs across Africa. So we invest in fintech that tries to unlock capital to get those SMEs that are excluded from the formal banking sector access to credit through innovative credit ratings and unlocking that capital for them. So that's the solution that we're working towards for the credit gap. One quick thing about what David said, which I think there's a model that's worked before when you're talking about getting the central banks together. In the mid-1990s, the European donors across Africa got together all the telcos, just when mobile technology was being launched across the continent, and brought them to Arusha and said, you guys either have to adopt one standard technology for your telcos, for your mobile technology, otherwise, you know, we'll stop helping you build out these networks. And the GSM technology was adopted. And then you saw over the last 30 years this huge revolution in telecoms, enabling the digital solutions that we're all investing in now. So there is a model for bringing African governments together to create a solution that unlocks investment and transforms sectors. And so it should be something that as investors we can push through our networks to bring to fruition.
Mm-hmm.
Great. Well, just on the barriers, despite the opportunities, we know there are critical barriers which deter institutional investors from investing in emerging markets. I'm going to touch on some. I think you've probably also touched on many of them. But to begin with, institutional investors seek very low risk investments, and they have rigid mandates, such as investment size, ownership, and geographical focus. And this is because they are first and foremost responsible for ensuring that they can meet the long-term liabilities and pay out the members who when they retire. Because institutional investors have historically invested in developed markets, it's also very difficult for them to overcome this inertia and the lack of emerging market awareness, access, and capabilities that comes with this. Intersecting with these internal barriers are external barriers related to emerging market environments and transactions. These include real or perceived risks of investment and return, underdeveloped investment pipelines, lack of reliable information, lack of liquidity, lack of ecosystem intermediaries, both specific and unclear regulatory requirements, sometimes and often sub-investment grade credit ratings, and high cost of transactions. So the convergence of investing in emerging markets, investing in private capital, and investing in emerging funds, which is what we're trying to encourage, really compounds the challenge of attracting institutional investments into the markets we're seeking.
Mm-hmm. Alan, do you want to talk through any of the work that I know your USAID programs are implementing to kind of help to bring solutions to
No, absolutely. So just looking at what donors can do in terms of removing barriers. We can do this by addressing information asymmetries, managing and reallocating risk, and reducing transaction costs, or some of the kind of areas in which we can address these barriers. I think, for example, USAID is using catalytic funding to provide first loss tranches into blended finance structures, and this directly impacts the risk-return profile of funds, absorbing losses should investments not perform in these funds. Catalytic funding can also be used to defray some of the operational costs, enabling fund managers to devote more time to developing new concepts, building relationships with potential investors, and developing pipelines of investable opportunities. There's some examples of where we've been doing this. An example is one of the funds we have been working with, which is the SME fund, and they were looking, and they have set up a venture capital fund of funds. They were seeking to raise $40 to $45 million. We came in with a $2 million first loss facility, pari passu or alongside their first loss into the fund. And the back of that, they were able to raise 850, close to getting to final close of a billion rand. They've managed to leverage 3 pension funds into this facility, which were the first funds really in South Africa to invest into the venture capital asset class. So the fund-of-fund model, we found, also offers VC investors substantial risk mitigation in that investors gain diversified exposure to this asset class across sectors. Supporting fund-of-funds is also something which we've been doing through our Mobilizing Investment project. Through Mobilizing Investment, we've provided to date about $7.7 million of catalytic funding, awarded grants to 18 fund managers through out of a market of applicants of about 400. So the appetite is huge. And these grants are already being used to provide some of the working capital, address some of the operational costs for fund managers, or to cover some of the startup costs of some of the larger funds that we're working with as well. For example, a $1.2 billion green energy fund in Namibia. So we are really de-risking and enabling funds to increase their runway so that they're able to raise the capital that they need and approach the institutional investors where they are seeking to raise capital from.
So, I mean, I guess what I'm hearing, just to summarize maybe before we open to, I think maybe we just have time for one question, but it seems like the demand is there. The growth, certainly across the continent, certainly more in different markets, is there. And the supply is there. I mean, there's certainly interest in investing in African markets. It sounds like certainly with more education, reducing the information asymmetries, I think, as you were just saying, Alan, I liked that phrase, just sort of bringing the information to investors to show the benefits of diversification, the benefits of moving more into African markets, as well as, to David's point, of bringing together, the different stakeholders of financial systems to actually make things work together and make it work in a better way for investors, make it easier for them to think about investing. It's just to summarize, I think, some of the points here. But want to open it up to the audience if there's questions. Yes, please, in the back.
Hi, I'm Rishi from Afrinex, a stock exchange recently set up in Mauritius. And my question was to Thea, actually, on the point that when she said that stock exchanges should play a better role in promoting Africa, right? What I have also observed across Africa, with exception of JSE and a couple of others, is that exchanges themselves face liquidity crisis. And because of that lack of liquidity, they don't attract investors and issuers alike. And that becomes a chicken and egg problem kind of, right? So I think that they may have to take more of an organic path rather than a pure brutal marketing push. And I just wanted to have your opinion on that.
I think that more knowledge is better. And I think that you need to get on the road and be visible, be open, be enthusiastic, open up to the wider investment community. I think that that's really the only path forward, and that's what seems to be working for us. So definitely, and you have such a great story to tell in Mauritius. So please come see some of our investors, and let's raise awareness and bring those assets.
Definitely. Thank you.
Do we have time for one more? Maybe? If there are any more? Okay, great. I know, Thea, you also have a plane to catch, so I want to be cognizant of time. But I think with that, thanks, everyone. This has been great. Great way to wrap the day. And looking forward to seeing more of you tomorrow as well. Thank you.
Thank you, Heather.
Nice
Great.
job,
Thank
Heather.
you. Yes.